Bitcoin bulls versus 69K. What needs to happen before a breakout? Hey guys, it's Keith Allen. Hope everybody had a fantastic weekend. I certainly did. Got to go watch some college football and some NFL. And, well, the games kind of sucked for me, but had a good time with family and friends. And it's always good to get out and spend some time doing those things. Let's just climb into what's going on. Friday, I posted a chart heading into the weekend. We had a massive amount of ask liquidity stacked on the Bitcoin chart. We could see it in fire charts. It was like 178 million between like 69K and 70K. We'll take a quick look at that just as a reference, and then I'm going to show you what's happening now so that we can get a feel for what's going on. You know, I'm not really surprised that we haven't had that breakout yet because of the amount of ask liquidity that's overhead. And I think it's probably a good thing for the health and strength of any potential move that it hasn't really happened as just a straight rip. I think it's much better that we see things consolidate. And, you know, we've been in this super wide range for a long time, since March, like from what our all-time high at 73.8 down to like 49.5. That's a lot of ground to cover. And I don't really personally consider that to be a well-defined consolidation range. I like these more compact ranges like we're seeing now. So let's just, as a frame of reference, look at that post from Friday, just to shed some light on things, and we'll go from there. This, of course, look at the Bitcoin chart, and you can see we have this massive amount of ask liquidity right here at the 70K level. That's at that level. That's 139 million, and it's changed a lot here. Really in the last hour or so. On Friday, I had posted that we had this double block here that was 178 million between 68.5K and 70K. You see this block here and another block above it. Now, of course, that has changed considerably, and you can see we've taken out this block below. It's now starting to replenish a bit, and we also have some ask liquidity laddering up higher into this range towards the all-time high. So the fact that this dynamic is changing is you know, not surprising, but it's also it's good, right? You know, we've got a monthly close coming up in just a few days. Thursday is the monthly close. We have an election coming up on November 5th. That's next week, and we've got a bunch of economic numbers coming between now and then that could cause some short-term volatility. But I think what we need to look at here is you know, if you notice this in the order book, and I'll zoom in tighter so you can see the liquidity that's just been cleared out, right? By virtue of climbing up through this range and taking out all of this here, we now have a pretty substantial void to go back down, right? There's very little holding price up right here, right? And so in the last couple of hours, we've seen a lot taken out here. This is probably, I think about, you know, 35 million was taken out of this range. And I had talked for a long time that, you know, for us to be able to move into this, you know, back towards this all-time high, we need to see some erosion up top. And whether that erosion comes through taking out the bids, taking out the asks as we've been doing here this morning, or whether it's ask liquidity floating up or dropping down or getting pulled, all of those things kind of change the dynamic, and we're seeing a little bit of all of it happen right now. Now, the technicals are pretty interesting to me right now, and I'm hearing people say technical analysis doesn't matter. Yes, it does, and I'm going to show you why it does. Let's head over to the weekly chart where we have, you know, we had a nice uptrend here over the past few weeks, past several weeks above the 21-week moving average. So this is actually last week our first full candle body, wicks and all. Not only was it above the 21-week moving average, it was above the 2021 mid-cycle top, which is 64,900, just sub 65K. So this is a very important candle. Now, you also notice we have a trend precognition short signal on this weekly time frame, and of course, uh, signals on new signals on TradingView are tentative until candle close. So this is tentative for the week, and for me, um, invalidating this would take that move above that prior high, which was at about 69.5. We just tested that, right? And this signal is still holding here. We just made it up to 69.2, and this signal is still holding at this stage. Obviously, a lot can change, but the fact that we are above this mid-cycle top, this is exactly what I've wanted to see, and I've been talking about this for a very, very long time. Uh, that better than being in this super wide range, like I alluded to at the top of the stream here, from being way up here, all the way down to here. That's just not a well-defined range for me. So I do like the fact that we're now going level by level. Before I go further, by the way, I just realized that I forgot to, and I'm going to clear this out so we can identify this a little bit easier. Just a reminder, if you like these streams, by the way, do me a favor, do yourself a favor, do us all a favor, and smash all the buttons, especially that subscribe button up above. It's a little bell up there on YouTube. Make sure you tick that one so that you never miss any of the live updates. And if you're following along on YouTube, you can join me. The live comments are open if you want to chime in, ask questions, share some insight. Love engaging with you guys. So by all means, keep them coming. I appreciate the support you guys have shown me and want to, hopefully we can continue that and grow this channel. Anyways, back to the business at hand here. We've got this series, right? We talked about just being in this monstrous range between almost 74,000 and 49K. And what I have wanted to see all along was a better defined range. And we're finally, right, now taking this in steps from our consolidation above this double bottom here at 54. We had a nice consolidation in this range. We've now made it above and seem to be RS flipping this 2021 mid-cycle top. You notice we now have full candles above this. What was this first one? This first one was this one was above, right? What was the low there? The low was 64.8. And so it was just not quite. We just had a tiny little wick below that. But there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, like over a dozen full candle bodies above this. And I call that a validated RS flip at this point. The fact that those are also trading above the 21-day moving average, we've flipped those both in simultaneously. And now we are looking at flipping the weekly. Okay. Also, this is our first candle now above the weekly. We're now in our second candle above the weekly with no wicks below. And this is important. So what I want to see happen now is I'm okay with consolidating here for a bit and then working to the next level, this 2021 top. And it has been absolutely brutal since we first started engaging with that level back in March. You can see the number of times we've engaged with that 69K level and just have not been able to hold it. Why haven't we been able to hold it? Well, the mechanics are simple. Straight rips, right? We just not have had, we've not flipped these prior levels, at least not sustainably. There were brief flips. There was a brief flip above this 21 day here, but there were wicks, touching below that were indication that we would break down, and we did. Right? Look at all the wicks below this 69K level that were indication that there wasn't enough strength there. So I've been saying since this point here, I've been saying we've got to see full candle bodies printing above 69K before we can go after this all-time high up here. Had we not ever reached this all-time high, and this happened just before the halving, had we not reached this, I don't think it would be debatable at all, right? I think it would just be like, oh, we're up against strong resistance from the 2021 top at 69K. Well, that resistance is just as strong now as it was prior to reaching this all-time high. And this was a bit of an anomaly. Maybe it was pumped, whatever the case may be. Yes, it happened. Yes, it's the benchmark we're trying to beat. And the way that we're going to do that, and the way that Bitcoin seems to be coiling up to do that, is by we established a double bottom here. You recall we had a series of death crosses, right? Back in August, we had this series of death crosses that we had talked about, and we were looking for a way to unwind that. And historically, we had seen that double bottoms were often the case where, after a series of death crosses like that, we would see price rebound. And so far, this is developing similar to a lot of other circumstances. Now, it doesn't always play out that way, right? Sometimes, as you can see here, there's a rejection from another technical level, as was the case here with the 200-day moving average. And we could very well run into something else here. As you can see, though, we have a brand new golden cross here between the red 50-day moving average and the purple 200-day moving average. So these death crosses are all unwinding, and there's one to go, and that's between the blue 100-day and the purple 200-day moving average. On the weekly, we are again, we've now unwound them all, right? So these are an indication that the trend is moving in the right direction. Okay, it's not an indication that we're just going to rocket straight up. These are lagging indicators, but it's indicating that the trend is indeed moving in the right direction, if you're a bull, that is. And as you can see, we have this macro trend line here. That trend line remains well intact and protected. And so, could we see another breakdown? Absolutely, we could. Um, and if that happens, I would look to test this, the validity of this RS flip on the 21-week moving average. And if that doesn't hold, you would, obviously look to the next moving averages where we've had multiple touches and tests, right? So a test from here would also be very strong. And ultimately, if things broke down, I would look to this trend line as being the ultimate foundational support. As we started back in 2022 after the FTX crash that took us there, we had a consolidation here in the 25K range, which was, I consider the launch pad for this run. I consider these to be, bear market rallies, to be honest with you. And this to be the first legit consolidation that sent price on this run that we've seen through the better part of late 2023 and 2024. So now we're just waiting to get back to this level. And I think we've got obviously a few things that are on the horizon that we need to be mindful of. Crackdown is saying spot CVD is trending down, perp CVD going up, open interest increase 10%. Not looking good to me. Well, time frames matter. And there's obviously people capitalizing on the volatility and the open interest and the illiquidity in the order book. And again, as we illustrate that here, you could see that there's opportunity in either direction. And especially when you see liquidity clearing out this way. We know that this is just rock solid resistance in terms of both the amount of liquidity here and the technical resistance here at the 69K level. We know that we have really a void in liquidity that has just been cleared out, now above the 66.5 level, with secondary support down to 65K, and then obviously downward from there. So if assuming, and it's hard to assume in this game, but as we can see here, there's at least a short-term trend of higher lows, and that's exactly what we need to continue to watch, right? So as long as price is, number one, above this trend line, number two, creating a series of higher lows, we then get to the higher highs. So as we dig our way out of this hole that we've been in, this would be the first higher high off of here. This would be the second higher high off of here. And now Bitcoin needs to make these more significant higher highs, taking out this roughly 72K level before it can go to this all-time high. And for that to happen, I want to see some consolidation above the 69K level before we rip to that. And I think that's going to take um, more work in this area. And I'm fine if that happens. We've got this election coming up. We've got a monthly close coming up in a few days. So it's reasonable to think that we could see some action within this range, but maybe not break down from here, right? It's okay if we don't break out or break down and we just continue to trade in this range. That would be healthy for a little while. Um, we get past the monthly close, we look and see if we have any new signals on the monthly, and we're already coming off of one. You can see here with the A1 algo down here, we did have a long signal. I have the A2s turned off. Let's see if we have anything up here, right? So we could conceivably see a new signal coming in either direction, right? For this, to get a new A1 signal down here off of trend precognition, we would need to see this orange A1 slope line revert back below this blue center line, the dash center line here. And that could certainly happen. Likewise, we could see another arrow form here moving into November, December. Any of these scenarios are possible, and that's what I'll be watching for as we get to the monthly close. We also have some significant economic data to pay attention to that could create some shorter term volatility. Tomorrow, we'll see some numbers that could move the needle. The Red Book is always interesting. Housing is interesting. JOLTS is certainly something that that Fed watchers are paying attention to. And then as we get into the latter part of the week, we have GDP numbers coming out, core PCE, and on Thursday, really big one with personal income and jobless data, more PCE data coming in the year over year, and the core PCE. These are critical numbers here. So all of this has the potential to move the needle. Also coming on the last day of the monthly close that evening, really could create some volatility, and that will be followed up by what comes through on Friday, which is probably a number that maybe carries even more weight than the jobless claims. It definitely carries more weight than the jobless claims, which are short term. It's going to be the unemployment numbers and the non-farm payroll numbers. So that's something that the market will be watching very, very closely on Friday. And of course, then we head into our last weekend prior to Election Day on Tuesday, and that's going to be a wild card. I think it's widely believed that if there's a Trump win, that the market is going to shoot up, and if there is a Harris win, that the market could pull back. Those are likely scenarios in the short term, but I would again maintain that regardless of who ends up winning this election, and there's probably going to be some chaos between Election Day and Inauguration Day in January, if considering the players in this game, and if 2020 was any indication, I think we can all probably safely speculate that it's going to get a little colorful around here. But as long as this trend is staying intact, I think that the long term, there's going to be some short term volatility around this election, but I think that the longer term trend that Bitcoin is just going to continue to do what it is already on path to do, regardless of who wins this election. We are in this halving cycle, and the 4-year cycle, and we're post halving, and things are trending in a manner that I think is healthy for a bullish outcome for Bitcoin in 2025. With that, I'm going to leave it right there, guys. I'll leave you with a parting shot of the order book. We did, of course, have one attempt to again flip 69K today, which at the moment has been rejected. But it doesn't look like bulls are done just yet, right? So we'll see how things develop from here. Want to take a peek at this? Let's go back to that higher time frame, because the resolution is a bit different. We can see what's stacking at these levels here. I think it was on the 6-month chart. This was once on Friday. This was 178 million. This is now 140 million. In this range here. and we have obviously, some buyers can buy into this without any slippage. So if we do nose up to it, I do expect to see some buying at that range, but I would just be very careful about shorting in this range because it's a matter of time, in my opinion. Um, doesn't mean that we are going to break through this week or next week. We might, but we can also be here until post election. So just be mindful of that. Know what your invalidations are in both directions, and you can take it from there. What's Game Zone have to say here today? I got one last comment in here. Still bullish. Buy price go up. Profit taking, price go down, buy the dip, and so on. Yeah, pretty much that's the game. So if you're trading, you're going to do that. If you're investing and you're building your longer term position, you know what the trend is, you know what your invalidations are, and you play that as well. And so let's go back to that daily. And here's the range, in my opinion. Mid-cycle top at 65K and 69, 70K. This is a range we're going to flirt with until we finally break through. But in my opinion, the consolidation is healthy. I want to see us eventually RS flip 69K, grind up here, full candle bodies printing, just like we're seeing here above 65, above the mid-cycle top. I want to see it above the 2021 top before we head into this all-time high territory. Crackdown has another comment. Had a short from 69.3, TP'd some in the FUD on Friday, left a runner. Didn't expect a pump like this, aggressive, driven by perps. Well, again, as we watch the dynamic of order book liquidity, you may, I don't know if you closed that trade or if you got licked, but there's a good chance that you're going to go back. Where was that? 69.3. Okay, well, looks like you're already back in the green at this point or close to it. So there you have it. You got to play those. You definitely have to play those shorts tight. I think at this stage, you got stopped at break even. So no harm, no foul. Good enough. All right, man. I appreciate the insight in the comments. Again, hope everybody has a great week. We've got lots to watch and lots to be thankful for at this stage in the game. And I think that we're going to see continuation in this range and hopefully an RS flip of this 69K level. Hey, maybe it happens before the end of the month. But I think it would be healthier if it happened after the monthly close or maybe right on that day. And then we see what comes next. But as always, the wicks below are the signs of weakness. So we want to see strength, just as we see here. Let's get an RS flip of 69K, and then we're in a position to go after all-time high territory. You guys have a fantastic week, and as always, trade safe, my friends.